Welcome to the latest episode of the Market Misbehavior Podcast. I'm your host, Dave Keller. It's a pleasure to bring this new podcast your way. We've had some really fun initial conversations with Mark Newton of Fundstrat, with Joe Rabel of Rabel Stock Research, and today, hopefully another great conversation, this one with Mish Schneider of Market Gauge. I met Mish probably 5-6 years ago. I interviewed her at a money show, and we immediately just had a great connection. Really appreciated talking with Mish and learning about her experiences as a floor trader in the ag space, and then how she has applied those as the director of research at Market Gauge, and really thinking about key areas of the market to focus on. That was one of my biggest takeaways from this conversation. The economic modern family, I know when I first learned about it, I just really appreciated the simplicity and the benefits of focusing on these key leadership areas. And by analyzing them consistently, you have a pretty good read on market conditions and economic conditions as well. We dug a little bit into consumer and retail in particular, also semiconductors, some of those leadership themes that have been emerging at times during the year, and what to expect from those areas, particularly in Q4. She shared her idea of the trifecta: silver, the U.S. dollar, and sugar, which I thought was a really interesting combination, not one that I'd heard before. She really made a case for why those were three key charts to follow in the commodity and currency space to get a good read on market conditions. We talked about some long-term themes like electric vehicles, themes that emerge over years, if not decades. But we also talked a little more tactically about some of the names and charts she'll be watching in particular for Q4. So please enjoy a great conversation I had earlier with Mish Schneider of Market Gauge. Mish, good to sit down with you. Where's your head at these days? Things going okay?
Everything's great, and it's really exciting to be with you in this venue now. I'm very proud of you and wish you all the best luck in the world with your new venture. So,
you're awesome to say that. If you remember back, and we've talked about this before, but you were one of the first interviews that I did 5 some years ago when I was first doing an interview show for stock charts, and you and I met at the Traders Expo or the Money Show in Las Vegas, one of those. And interviewed you in our hotel room because we didn't have a good spot. So we set it up as a little interview studio. And the moment we started talking, and particularly when the interview was over, I remember we looked at each other like, we should do this more often. This kind of works, right?
Yeah, we definitely had an immediate connection and a really long 5 years of wonderful content together.
It's been awesome. And you, listen, as always, have always brought interesting ideas, good thought-provoking, concepts about how to try to make sense of these markets. And as we were joking before we started, I mean, there's no shortage of things that we could cover in a short discussion together. Give us like the high level, perspective of where we're at. The S&P making new all-time highs again this week. We have a lot of potential catalysts here in the next month, if not beyond there. Do you find yourself encouraged by the market making new highs, or more skeptical for some reason? Like, where are you at, big picture?
Well, I'm certainly not going to be skeptical of new highs. Obviously, the headwinds that the market has gone through between weather issues, and of course, as we're speaking today, we're bracing for another potential huge impact to Florida, which of course our prayers go out to everybody there. And the Middle East conflict, the Russian conflict still there in the background. And then we have a tremendous amount of debt and the government spending, and of course, potentially contentious election. I mean, the list goes on and on and on. But yet, here we are. I love to look at the SPY and the NASDAQ, which, by the way, is underperforming the SPY, which is also interesting. So the market rally has broadened out. That's a good sign. But you know me, Dave, I'm all about the economic modern family. And so this is what I have my biggest eyes on right now. Because if you look at a chart of my granny and grandpa, right, Russell 2000 and granny retail, you see a tremendous amount of consolidation, and particularly in granny retail, XRT.
Yeah.
You can almost go back the entire year and see a trading range. Look at that. Go back to like the beginning of 2024, and we are there in a range between, let's call it 70 and 80. And so that's when a technician gets really excited, because we don't have to anticipate, is it going to break out to the upside or break down from the downside? All we have to do is wait
Right.
for it.
Right? Just be
Yeah,
patient and wait for the signal to emerge, I guess, right?
exactly. And of course, this of all sectors is so important to the U.S. economy right now, given everything, given seasonalities, given inflation, given employment, given wages, the list goes on and on there as well. And yet Granny is hanging tough. Plus, as we know as technicians, the longer something consolidates, the more powerful, especially when it's a high and wide channel, the move
Mm,
is when you get the follow through. Now, at 75, we're smack dab in the middle, which is kind of where it's trading right now.
yeah.
So you have to say, is SPY giving us a clue that this will eventually break out and it's just waiting for certain things to happen, maybe a more dovish Fed, because obviously that has not happened with yields rising, or is it waiting to drop down because things become looking a little bit more recessionary? It's hard to know which to follow. So that's why I'm just in this area in terms of macro. To me, this tells you everything, which is, find your stocks, find your sectors, have some fun, but don't get too attached until we see how this resolves.
I love that. You had mentioned your economic modern family, and you and I have talked about this a number of times before, but for people that are kind of new to you and your work, Mish, can you just give the, basics? You mentioned Granny Retail, you mentioned small caps, and I know there are others as well. What does that group of stocks or ETFs mean, and why are they so important in your process?
Well, I am a storyteller and a performer, and so I love to think in terms of characters. And when I first got involved, I was a futures trader in New York on the Commodities Exchange in the World Trade Center for so many years. When I pivoted to stocks, it's a very different thing. I mean, raw materials are pretty easy, actually. There's supply demand, and then, of course, there is some politics and things like that. But it's so much more complicated when you're looking at the economy, and I needed to figure out not only how I was going to explain it to myself, but how I would then, as a teacher, explain it to others. And so it started to become interesting to me that people would talk about NASDAQ and SPY, but the 2,000 stocks within the Russell 2000 are within the United States. So that if we really want to get a pulse on what the U.S. economy is doing, we have to look there. So he became the grandfather, if you will. And then, of course, the second most important factor was the consumer. So that's where Granny was born. That's 70% of the GDP. And then as I started to study, I realized there were other sectors that were also key, again, U.S.-centric, one being transportation, obviously how goods move. That could be a huge factor in terms of determining the economy. And then semiconductors, which has taken a much bigger role over the last 10 years, obviously with chips and growth stocks, that's sister semiconductors. And then we kind of wrap it up with regional banks, which can have an impact or not, but when it has an impact, it has a huge one, if we can recall the mini bank crisis of 2023. In the regional banks, and then biotechnology, which is I love because it's a cyclical and a non-cyclical. Again, can stay dormant, but can have an impact when it wakes up or falls apart. And actually, we sort of wrap that up with Bitcoin has been my newest member, my tween, because it doesn't really,
Ooh.
yeah, it doesn't really know what it wants to be yet when it grows up relative to the U.S. economy.
I didn't know the family had a new member, but that's so appropriate, right? I don't know what sort of signal that means when we have a new addition to the modern family, but that seems encouraging, I would imagine, for crypto, getting a seat at the table here.
Exactly. And a very important seat at the table because obviously you can see right now he's more in follow mode in
Yeah.
terms of it's still a risk asset, but we're waiting to see if it ever becomes the great decoupling, which should spawn a whole new generation of family, right?
Right. Who knows what's next? I mean, you hit on so many interesting. I mean, just looking at the members of the modern family, I think that's really obviously thoughtful with what you selected and why. Semiconductors are one area of the market really seeing a bit of a resurgence here. I mean, sort of sideways like NVIDIA, just in this big congestion range. And now all of these NVIDIA, AMD, the ETFs like SMH, all kind of rotating higher. Is this an area where you think there's opportunity going through the fourth quarter or not?
Well, it certainly, I won't dismiss it as an opportunity, but it's not really where my eyes are because I
Mm,
feel that in 2023 and 2024 till July, essentially, there was when the opportunity was the ripest.
right.
And now it's actually underperforming some of the other sectors, even though NVIDIA went to 52-week highs yesterday. And it's really all about NVIDIA. And now we have a lot of projections into the earnings that are coming up. Are they going to be as strong as expected? So there's no doubt that semiconductors and AI is here to stay and is only going to grow. But there are other factors that have come involved now that have maybe impacted it. One, of course, would be the actual economy, because you have to have, beyond companies, you have to have people wanting to constantly update their equipment to keep up with the revolutionizing, if you will, of semiconductors and chips and
Yeah.
computers. That's number one. Number two is because of the strain with utilities and the natural resources that are used to keep these data centers open and growing, there's been a little bit of an impact there because costs have risen, particularly if you're
Yeah.
looking at copper and things like that. So it's not my, that's what I'm saying. I am so excited right now. I have a few sectors we can talk about that are not in the family that I'm watching very carefully, and I have some skin in the game, and I'm really, really, really waiting to see if IWM can take out 225, if XRT can take out like 80,
Yeah.
and even IYT has been also sort of sideways. If any of those three members go, I think that I would just jump in, like I kind of like what I said about gold when it took out 2100, just like hold your nose and jump. I would do the same thing with these. So I'm having a little fun. I have cash and I'm waiting. And of course, seasonally, that's not the dumbest thing either, because October can be volatile, like we're
I
seeing.
was going to say, right, and most, yeah, I mean, the average year, kind of being patient in October and getting ready for what emerges for that November, December rally, it has often been a pretty profitable way to approach things. Where are you looking? Where are the opportunities that you think we should be focused on that may be actionable here?
Well, I was just having a memory when we did a roundtable at Stock Charts a
Mm,
couple of years ago,
yeah,
and you asked me what my top choice was, not the gold choice, but I said Meta and Facebook, and everybody laughed at me like,
yeah,
"Oh, that's so
I remember
funny."
that. Yeah,
Oh, Mish, oh God, she's so funny. Yeah,
yeah,
right. Who's laughing now, right?
yeah,
So, so that's why I preface it that, because I see things sometimes before a lot of other people do. Let's put it that way. And so one of the key areas, and this one, by the way, is not so necessarily sold to me, but this vanity trade, and this ties right into Granny,
mm,
is I'm so excited about it for many reasons, not the least of which, of course, is the health for people who have had obesity issues and heart disease and diabetes their whole lives and have not been able to lose weight. With the access to these diet drugs now, GLP-1 and Ozempic and Wegovy, we can see that field is broadening out. So if we're looking, let's go to the consumer next, but first, if we're looking just from a biotech standpoint,
mhm,
there are companies like Eli Lilly that are really on top of this, Novo Nordisk, although they've had a couple of issues here right now, more on a political side, but that's a company. Now you're seeing Pfizer wants to get into the game. Even Weight Watchers announced that they're going to have some kind of a diet drug. So you want to look at the companies that are innovating at that point, and of course there'll be competition of price. So,
mm,
but all of that aside, that's really where I get excited for the consumer, because I like to think logically about what a trend means for
yeah,
stocks. So, okay, now you have obesity rates at about 38%. If you look at a graph, obesity rates have come down from the peak. That's great news.
interesting. That is good
Yeah.
news, right?
Yeah. But let's think about it, okay? So if you are a person who has had these issues your whole life, what does that mean? Most likely it means that you haven't taken great care of your diet or your hair or your skin. You buy makeup, But, that's makeup is always the great equalizer because every woman buys makeup for the most part. But that still could be even more because you're going to start to feel better. You might, after you lose a lot of weight, might need a little Botox, a little plastic surgery. You want to go out and buy nicer clothes. So you have to think in terms of companies for the things that will be able to benefit from this, and then things that won't benefit from it. Being like some of these junk food companies may not necessarily do as well. I read Campbell's Soup got an upgrade because people losing weight are starting to drink soup from a can, which they shouldn't, but it's cheaper.
Whatever works, I guess, right?
Hey, well, it's a sign of the economic times because most of the people who are losing weight like this using it are not like the Hollywood cognoscente. It's actually people in middle America, in states like Kentucky, one of the largest percentages of weight loss happening there on these drugs. So, these people are not the highest economic bracket. So it makes sense that they would go turn to Campbell's Soup, but that's still better than Doritos, right? So that's one thing. The other thing is, like I said, I'm looking at like AbbVie, which was one of my top stock picks for 2024. It's done great because that is injectables and things like that. So I think we've just gotten started with seeing these levels of consumers. I think 2025 is going to be really exciting. And I have, kind of a list. Hims is a great stock right now. Looks like it's really getting ready to go. Elf Beauty had such a big correction. I actually bought a little bit of that today. Eli Lilly, I just mentioned. So you want to look out and see. Ulta was one that Warren Buffett just bought. But, he's even anything to do with what people might do when they're all of a sudden thinner and healthier. That's what I'm looking at. And again, all tied into XRT, right?
That's right. It's interesting when we're talking about retail. I mean, retail as a group, right? XRT has been sort of sideways here for quite some time, as you mentioned. How much do interest rates play into any of these themes, right? I mean, the sort of, logic would tell you that, lower rates means things are less expensive. But I mean, that's really more for just kind of bigger discretionary purchases. Are interest rates a factor with any of these, or is this kind of immune to that?
I think it would be relatively immune to that.
Yeah. Yeah.
I mean, obviously, if things got crazy and we started to see major inflation and the Fed forced to completely do the opposite of what they're promising to do, would be a factor. And it might be a factor if the rates drop precipitously too, because then people will feel a little bit wealthier. But within the range of where we're at right now, I don't see that as much of a factor. Grandpa Russell, yes, not in the granny retail space.
Yeah. I'd love to pivot and talk a bit about commodities. That's where again, you've got great experience trading commodities, Mish, and I'd love for people to learn a little bit about, how you're applying what you know to what you're seeing right here. Certain areas of the commodity markets obviously have been remarkably strong, and I'm thinking particularly of precious metals like gold and silver. Gold kind of coming off of all-time highs, silver a bit as well. You still constructive in that space, or do you see this as an opportunity for one of the biggest, I guess, successful trades in 2024, taking a bit of a breather?
Well, it's interesting because there's a huge difference between gold and silver, right?
Yeah.
So there's the relationship between the two. So gold, as far as I'm concerned, I mean, could it go to 3,000? Could it go higher? Absolutely. But at 2,700 was my original goal. In fact, now that we're talking about it, I have to go back and dig up my predictions that gold was going to go to 2,700 because we're there.
We're there, right?
Yeah. So I have to now step back and say, do I think this is the top? Well, there's the top and then there's the top. I think that gold is acting as a mirror to everything, and it's showing all the cracks. Again, me being so theatrical, I think of the witch looking in the mirror and going, who's the fairest of them all, and the mirror is reflecting something beautiful, but she's not so beautiful,
Right,
and so it's the same thing. The gold is showing is somehow masking by showing a shiny reflection, but there are cracks. So if the cracks don't get wider, then maybe we'll see gold come back down.
Yeah.
Silver, though, intrigues me because silver has taken its sweet time, and it's frustrating because every time it makes a new high, then it sells off. You shake out the week longs and start again. But it's really going to be the silver gold relationship when people ask me about inflation that I'd be watching most carefully. And they keeps flip-flopping. If silver starts outperforming gold, it's kind of like semiconductors. They just have to go sideways now, and you can still see a major rally in some of the other areas, like we're starting to see in S&P. Same thing with gold. Gold can kind of go sideways, up and down, up and down. But if silver starts to outperform, that's information. And that information generally means it's one of my trifecta of, maybe inflation is not necessarily under the control that people think it is because of oil.
Got it. So this is silver, one of the trifecta. What would the other, to the dollar?
Dollar is definitely in my trifecta.
Okay.
Although historically, if you look, the dollar doesn't necessarily always have to have an absolute relationship with the price of commodities, but it is an impact. And right now, the dollar's gone up as a flight to safety, which happens during geopolitical events.
Yeah.
But nonetheless, if there was a dramatic move, so if, let's say, the dollar broke 100, because that's where it stopped, the XY, perfectly at 100. If it breaks under 100, that would probably tell me that the dollar is devaluing. We already know purchasing power has declined with the dollar, but it hasn't really been a major impact until it actually does something dramatic like that. So that hasn't happened yet. So silver gold is dancing, dollar is holding. That's why we're not too worried, but we use the word yet.
Right. And then what's the third? What's the third one of the trifecta? I give up.
Sugar.
Oh, sugar. Okay, got it.
Yeah, because sugar, by the way, is related to oil, right? Because they do use some sugar for different types of biofuels and things like that. So there's a connection, but really sugar is really, to me, it's the heartbeat of how people consume food. And the price of sugar, if it goes way up, is super inflationary because it means that everything has gone up. I mean, right, if you go to the supermarket, let's go back to Campbell's soup. I'm sure if you look at the can, I haven't lately, like years, but sugar would be one of the ingredients, right? Sugar's in everything. And sugar is something that people turn to in hard times. Sugar is something that people in other countries have fought over when there's a shortage in stores. So sugar right now is not really, again, it's 2019, it was at 4 cents a pound. It's at 21 cents a pound now. I mean, it's still way higher than what it was.
Yeah.
But it isn't flashing as my trifecta play major danger unless it gets back over, let's say, like it got up to over 23 cents briefly, like last week, but now it's back down. So again, all of these commodities are telling you, and we can look at oil, are telling you inflation's not over. But that doesn't necessarily mean the super cycle that even myself have predicted has gotten started yet. It's time. Dave, we're in the business of timing. Everything we've talked about is timing, right? Timing with retail, timing with grandpa, timing with semiconductors, and now timing with inflation.
For sure. We only have enough time for like a question or two, Mish, but I'd love to just ask briefly about crude oil because, obviously events in the Middle East for the longest time, sort of, minimal impact, it feels like on crude oil, on energy, except they were obviously going down during recent months. But all of a sudden in the last couple of weeks, the, whole situation has escalated. Oil, energy stocks have become incredibly volatile. How do you approach a market like this where all of a sudden there's an injection of volatility, a big macro factor that is unknown at this point? How do you approach this as a trader and try to make sense of things?
You're going to love this answer, Dave, because it's not what you expect.
Okay.
Well, actually, I won't touch oil right now. I like to watch it. I watch everything for information. $70 a barrel right now, I think, is a big key area, and it actually kind of bounced off of a 50-day moving average. So if you're looking at crude oil futures.
Yep.
Right now, it's back in the news, but there's plenty of supply of it. And if we go down the road, and this is where I'm going to pivot in my conversation here, down the road, this isn't the future. It's kind of like crypto. The dollar may not necessarily be the future, but it's so down the road, but not as far down the road is alternative energy and EVs. And I get bombarded I get blasted by people when I say EVs are going to make a comeback. No, you're wrong. You're wrong. You're wrong. They're dead. Everybody who wants one got one. They don't like them. No, I'm not wrong. I'm not wrong. So when I think of high oil prices, I think of alternative energy starts to look more and more attractive. You got a big storm disrupted every gas station. Now that doesn't mean power outages wouldn't happen either, but nonetheless, people can buy generators to charge their cars. They can't go out and get oil and gas. And eventually gas stations anyway will probably have charging stations. So I think the more volatile oil is, the more in favor it will be for alternative energy. So TAN has been basing again for months.
Yep.
And, Tesla is Tesla. It's got its own kind of vibe there, but if it gets through 250, it looks pretty good. I've been watching Rivian, which has rock solid support at 10. There was news with that in Amazon today, ordering 1,000 Rivian trucks to do deliveries for them using some sort of a visual assist. The technology is mind-blowing. So that's, when you ask me about oil, I get excited about the more volatile, the more people will start thinking about this technology.
Well, I love that answer because it really, to wrap it up here, Mish, it's very forward-looking, right? It's less about what has happened. And I think so much with something like crude oil, we're so used to looking at historical precedent, but we're, pun intended, in uncharted territory with things like EV, right? This is a much larger theme. We'll see how things play out here. Mish, this was awesome. I can't thank you enough. It's always so much fun to chat with you, and there's so much wisdom and experience between each one of those little nuggets, and I hope everyone appreciated their time with you today. Where can people find out more about you, the work you guys do at Market Gauge? Where can we point them for you?
Well, we have a website, and that's obviously marketgauge.com, and there's a lot of great content on there. So I encourage you to go and sign up for my daily. I do that pretty much every day, and there's a weekly outlook that's more broad-based. Plus my media appearances, we have a media tab. So including this, everywhere I appear is on there, so you can always check out the interviews. Social media, of course, I'm most active on X at Market Minute, as shown on the screen, but I also do LinkedIn and Facebook and Instagram. I don't do much TikTok. It's probably somewhere I should go. and the histrionics, that's just me. So
I love it. Mish, thanks again for coming on. Best to Keith and Jeff and the team there, and we'll talk to you again soon. All right.
Thank you so much for having me, Dave. I'm honored to be one of your guests.
What a pleasure to sit down with Mish again. Can't thank her enough for often sitting down with me virtually to talk about market conditions. I really appreciate Mish's experience and perspective, particularly when things get kind of crazy like we see now with a lot of macro influences. I really appreciate her economic modern family. I think it's a brilliant way of, simplifying the process of just identifying key areas of the market, tracking them, recognizing what their strength or weakness can tell you about broader market conditions. Really appreciate the trifecta: sugar, silver, and the U.S. dollar, and why those are key areas and key charts that I'll certainly be tracking a little bit more closely going forward. Love the idea of the long-term themes and how to just recognize the pace that some of these take to evolve, years, if not decades down the road. But also thinking, I think in general, great ideas about charts and particular names and areas the market should be focusing on in Q4. Hope you enjoyed this conversation with Mish Schneider. Thanks so much for tuning in to the Market Misbehavior podcast. Who else should we sit down with?